Good morning, guys. Welcome to another episode of NGMI Trades. The date is Saturday, the 17th of September. The calm after the storm. A post-September CPI number, which was expected to come in at 8.1%, as we discussed in the last video. And we had the three options, depending on what came in. What actually came in was 8.3%. 8.3%. So a drop of 0.2% on the headline rate, 8.5% down to 8.3%, but above expectation. And more importantly, was the core CPI rate, which moved from 5.9% up to 6.3%, so a 0.4% increase. And the core headline CPI rate is something that the Fed watches like a hawk. So not great for risk. Quite the opposite, awful with risk. So as per our conversation earlier last week, above 8.1%, 8.3%, we cleared the decks, sold all crypto and a lot of equities. And we will go and have a look at what the aftermath was, where we sit now, and what we think is going to happen in the coming days and weeks, as we have obviously OFMC next week, which will be massive. But yeah, let's go and get into it. So, being Ethereum Merge week, let's start with Ethereum. Very much a buy the rumor, sell the fact event. The run up to it in the last 10 days, so we were about $1,400. We ran up to $1,800, and since then we've sold off aggressively. The day itself we saw an 8% sell off, and since then we've trended lower, so down to $1,430. For me, the first area of interest with fresh capital is here. It is an excellent area of confluence, and it also represents the golden pocket for this period. Now, that is for your pads, $1,275 to $1,300. That sort of area, I'll be swinging the bat. Bitcoin Ethereum is where it gets a little bit more interesting. So, I think right now, and we've looked at this chart numerous times, but the valuation after, again, we pumped into the merge and then out of the merge, it's been an aggressive sell-off. Bitcoin and the whole space is sold off, but Ethereum has really underperformed. Now, let's take this a little bit wider. So, on the 4-hour chart, let's make it wider than that. Let's go to the 1 week chart. So, on the 1 week chart, Ethereum, Bitcoin. We held this trend line for a long time, as we discussed in detail. We lost it back in May, down to that 5.1 area where we put risk on. We came up to this point here, sold risk here, as my take was that we'd hit this line of resistance and track back down here. I was completely wrong. Then the merge narrative was very strong, and we found ourselves back here. Since then, we've got this big red weekly candle coming back down to retest this line. Now, let's look at it on the daily. We're not that far away. So, on a, look, let's be honest. These are still lines on the chart, but approximation, you're looking at about 7.1, even just call it 0.07, and we'll be getting back to that line of resistance, support, and at the level it gets interesting. If you were going to flip some Bitcoin back into Ethereum to see if that line holds. In all honesty, I have a very set view here. If SPX continues to track lower and we have a bad week for risk next week, which I think is certainly a possibility, Ethereum will continue to underperform Bitcoin. So it really depends on the strength of the move lower for SPX. I think on a move higher, Ethereum, if SPX was to bounce next week and FOMC was taken positively by the market, then I think if we get down to this level, we will see a bounce. So this, that I will be. If I had any Bitcoin left, I would be swapping them for Ethereum. I don't. I am in USDT, so I will be keeping powder dry. But I will be watching this line with a lot of anticipation. Right, Bitcoin. So Bitcoin got up to 22.8k pre-inflation number. Obviously, as discussed, the inflation number was not what we wanted to see, and the sell-off was aggressive and immediate. I personally managed to get out at 22.4k just filled it immediately. Had a strategy, stuck to the strategy, and it served me very well, in all honesty. So we moved aggressive lower and then have tracked lower through the rest of the week. Over the weekends, I think we got down to 19.5k. Saturday morning now, we're now back to almost 19.9k. I'm not interested in this. I don't care. I ignore the weekends anyway. And to be perfectly honest, there is no reason for me to trade between now and FOMC. If FOMC comes in at 75 basis points, then again we might see a pump of some sort. But again, I will not be buying that. I've got no interest in that at the moment. 100 basis points will send the market crashing lower. 50 basis points, which I'm sure is just not going to happen, then that would interest me to get back into the market immediately, because it would suggest something towards a pivot for the Fed. It's not going to happen. Let's be honest. It's not going to happen. 75 basis points is nearly nailed on. 100 basis points is the outlier, but might happen. The thesis remains, and it has remained on this channel, as you know, we are buying risk on the basis that economic data gets worse, house burns down, Fed cannot raise rates as quickly as they said they were going to do if inflation is under control. And at the moment, it doesn't look like inflation is under control to the wider population. Now, I am convinced that this will change in the coming months, but in the meantime, I'm happy to sit on my hands and wait for levels to come lower, as I believe they will do. So this is the area I'm looking for Bitcoin. It is the low of June, and then obviously the support which we found various times since then of sort of 18.6k. So 18.6k down to that 17.4k level. That's sort of barrier I will be buying risk in. We're just going to see when we get there. So that's Ethereum, that's Bitcoin. Let's just have a quick look at SPX, because at the end of the day, at the moment, that will be the primary driver. Now, SPX, back in June again, we were DCAing into risk here, 3,650. That's done very well. And since OFMC, since inflation, we closed on Friday at 3,870. Now, I think there's a decent chance we come back down to these levels, so 3,700s to the lows of June. If we do, then I think there's a very good chance that Ethereum will be back down in that $1,275 to $1,300 region. I'm pretty convinced it will be if SPX is here. So a great time to pick up risk, providing obviously this area holds, which, look, every day the environment is changing. You have to constantly test your thesis, and that is what we do regularly on this channel. But yeah, that is the game plan. You've got to have a strategy. You've got to have a strategy set out, and you've got to stick to it, and that's what we do. So yeah, we'll see how next week plays out. As I say, FOMC 75 basis points basically nailed on. 100 basis points is the outlier. 100 basis points would be car crash risk. 50 basis points, which is not going to happen, would be great for risk, but I mean, you can essentially rule that out. So DXY started this unbelievable ascent from April last year, April 21. It came into this ascending channel, which it broke out of in April 22. In our June video this year, we looked at this level and we said that if DXY collapsed into the channel, risk would take off. The opposite happened. DXY actually bounced off the ascending channel, and since then it's been up only. Look, it makes sense that DXY is doing well, especially with hindsight. The macro environment is horrendous. People want to park their money in what they deem to be the safest asset, which is the US dollar. Currencies around the world are performing appallingly, so it makes sense that DXY strengthens. And then also, in terms of monetary policy, the Fed has been fastest to act in terms of fighting inflation and interest rate movements higher. So we are where we are because of that. Now, the reality of it is, with inflation appearing sticky, i.e. 8.5 to 8.3% was slower than we expected, and core inflation up, it means that interest rate policy, especially in the eyes of the market, will remain higher for longer. I still believe the thesis that inflation is not sticky. It is coming down 9.1% to 8.5% to 8.3%. And I think we're going to see this continue to move lower, and I think we'll see core inflation begin to move lower as well. But at the moment, the market is not pricing that in. So the next 4 weeks is going to be very choppy, and I think there is certainly the potential for one of those big capitulation events. I think we could see a big spike in DXY. I'm not saying it's going to happen, but I think we could see a big spike in DXY. I think we could see one of these events which brings SPX 200 points lower down to that area, retesting those June lows, which will also bring Bitcoin down to retest its June lows, and then Ethereum down into the minimum of that golden pocket area of confluence, $1,275 region. I am sitting on my hands in terms of risk at the moment, but those are my areas of interest. I will be buying risk at those levels. And if I had any Bitcoin, I would be probably swapping some into Ethereum at 7.1, just for the punt, in terms of, you follow the trend lines. Anyway, not financial advice. As always, it's been a pleasure, guys. Good luck out there. It's choppy, it's hard work, but if you have a strategy and stick to it, there's still money to be made. Have a cracking weekend all, and I'll catch you in the next one.